Good morning, everyone, and welcome to the Quantum Leap morning homework session. For those that don't know me, my name is Doug McKay. I'm the founder and head moderator of Quantum Leap. Quantum Leap is a self-organized learning environment. We have a private Skype room that's been in existence for a few years now, and each morning we come together and go through a live go-to where I look at the structure of the market. We look at the macro to the micro in terms of key numbers and trends. So if you're visiting us from Twitter or watching on YouTube after the fact, you might want to just skip ahead because we do start with the regular routine of going through the macro to micro before we get into some more in-depth chart analysis and set up our trade levels. Before we do anything, I've got to get the disclaimer out of the way. I want to apologize for being late this morning. Just got lots going on. I'm heading back up to Bay Street today, and wasn't even sure I was going to be able to do this session. But before we do anything, we have to get the legal out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors can lose more than initial investment. Excuse me. Got a frog in my throat. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. All right, so we're going to get the numbers right out of the way. I just want to check to see where we're trading. I think we're 165 or 1865.50. Okay, so a couple key notes. First of all, we're above the year open, 1837.75. We have a bullish year back in play right now. We are currently trading above the month open at 1864.50. We have the month high sitting up at 1892.50. and the month low at 1803.25. So we're continuing this trend up. We just had a shift on the VPOC. Now, apparently the shift happened if you're using 100 days worth of tick data. I don't keep that much tick data because of the fact that it's just a drain on my system. So I only keep 10 days of tick data. Now, yesterday I noticed that the VPOC shifted from that 1774.50 up to 1864.75. FT confirmed with me it did shift earlier. He did a download with 100-day, and his shifted on March the 31st. So we are accepting value both on a long-term, mid-term, and short-term basis up here at 1164.75. What that makes my main hypothesis is a move to test new highs, and my overall hypo right now is for us to go up and test that 1890.250 all-time high and test the 1900s. With them accepting value higher, that's the higher probability. Does that mean that we're not going to get a retrace before we do that? Well, we've got a couple reasons to believe that that could be the case, and we'll talk about it when we get deeper into the analysis. So yesterday we talked about this in the morning. We were looking for a rotational day with an upside bias of going up and testing that 1864.75. 1865 was my main target above, and we went and hit that almost to the tick. But going into the day, we opened the Globex at 59.25, had a high at 62.75 and a low of 57.25, and we opened the market in range at 1859. You can see that these numbers, take this holiday out of the equation, these numbers are all trending up. We did break the IB to the bottom and then to the top, so we ended up with a neutral day. Our opening swing, we went through the clues. I stuck around and traded this live yesterday for you guys, and we had big rotations. It was on terrible volume. It was a tough trading day, but because we had a plan, we were able to scoop some points out of it. Our opening swing gave us a clue of the rotational day, so we had open auction in range with a 3.5 point opening swing and a 6.5 point IB range, which was leading us, telling us we were going to get a balanced type day, and which is basically a rotational or horizontal development day. Initial balance high 64.50, initial balance low 58. We broke it to both sides. You can see that all the numbers, again, this one day here is a holiday, discount that. You can see all the intraday numbers are going higher. Higher 1230 number 63.50, higher high 65.50, higher low 56.50, higher close is 64.25, and the VPOC shifted up to 63. Value area, same thing. The value area is increasing. 65 as the high, 61 as the low for a 4-point value area. And we did do a make and break to the low side of the IB, and then we went up later on in the afternoon and broke it to the high side to create a neutral day. Volume was atrocious. Look at the volume. 468,000 in the RTH and only 532,000. I was getting upset because I tried to do a couple add-ons to my trade and couldn't get filled, and well, look at the volume, and that's why. Looking at the daily report, currently right now we have a full session high at 66.25 and a full session low of 60.75. So our 20-day ATR target 81.50 to the upside. This is a key number right here, this 81.50, and it's going to be a key target above today. And our overnight low 1845.50, which is right by that 1846.25. I think it's in around 46.75, shifted the CLVN, but basically the other side of this balance that we're around 64.75. We do have some news today. We've got existing home sales coming out at 9 p.m. We have news coming out shortly, HPI at 8 Central, 9 Central for the existing homes and Richmond Manufacturing coming out. So we have news within the first half hour. Be careful today on that first half hour. Let's take a look at the trend, macro to the micro. I always like to start with the monthly. We've got good slope, good separation. We're trading above the prior month close. You can see that we're in the upper distribution. Trend is very much intact on the monthly. On the weekly, had a little bit of weakness 2 weeks ago, and last week we, hold on. Sorry. Last week we popped back above the 9 and the 20, and we're currently trading above the prior month week high and week close. We're starting to get slope, a little bit of separation. The trend on the weekly is intact. Keep an eye out for a possible head and shoulder. Let's always got to keep your eye out for developing patterns. Taking a look at the daily, we had that move down, created the tech gap right here, closed back above the 9, got back above the 20. We've got a MA hug going on right here at 1853. We're getting a little bit of a tech gap on the daily, so watch the daily for a little bit of a pullback. But we're basically consolidating on the daily, as you'll see when we get to the composite. Going over to the geometric chart, well, we talked about coming up and testing the upper line yesterday of the shorter term downward sloping fork. We said that would be in around the 1869. We didn't get there. We kind of failed at 65.50, but now in the Globex we've gone up and tested that upper line. So this is going to be crucial on whether we reject off of this upper line of the shorter downward sloping fork, and so keep an eye on the 66.75 level, which is basically going to be a break above the Globex high. If we go above that, move to test the center line of the longer term upward sloping fork, takes us to that 1896 area, which I'll talk about, which is going to give us a new high and what our main hypothesis still is. If we fail off of this, coming back and testing the upper line of the downward sloping fork, longer term, takes us down to that 1855-75 area, and there's an area that I want to talk about on the composite for that. Just go and take a look at the intraday trends coming into the RTH session. You can see that this trend that we've been watching on the 4-hour is still intact, created that tech gap, closed it out, created another little tech gap, closed it out through time, and now we've bounced off of the 9 EMA. We've got slope and separation. The trend on the 4-hour is still in an uptrend coming into the RTH. Taking a look at the 30-minute, a little bit less of a trend, a lot of consolidation, but we're trading above the 9 and the 20 right now, possibly starting a trend on the 30-minute, but not conclusive, just more chop. On the 5-minute, well, we've got a definitive trend starting here, but we've got a technical gap right here and a Mr. Sneaky in here. Didn't quite close it on this candle right here, moved up, got a double top, weak high here at 66.25, 66.50 area, likely to go up and probably even put in a new high prior to the open. So we'll have to make adjustments on our ATR targets. But we do have a technical gap. A close of that tech gap is going to bring us back into that microcomposite VPOC in around 65, 64.75. And we'll just keep an eye on this development here with this move up. Obviously, the news that just came out has caused a little bit of a spike. Let's see if we get the pullback to close the technical gap here. So let's go to the composite and take a look at the composite. So you can see that, let me just open this up. You can see that we're back in balance around this 64.50, and the composite VPOC shifted from that 1774. It was all the way down here, right here at the 1774. 50 area. Now it's shifted up, and we're accepting value higher at the 64.75, 65, which is also the microcomposite VPOC, going all the way back to 14th of February, and in this larger balance zone. But within the larger balance zone, you can see that I've got areas that are defined of where they were trying to hold value or where they accepted value. And so currently right now, the big number you've got to watch is this 67 area to 68.50. And I'm actually going to use the 68.50 because it is the CLVN, and that will give us a definitive breakout of the value area high of the larger microcomposite, breaks us out of the range high of the shorter microcomposites, and gets us a move up towards that 71, 72, 75 area, and then puts us inside of this balance zone, the value area of where they were trying to hold value, where 1881.50. Where did we hear 1881.50? That's our 20-day average true range target, is 1881.50. So there's two areas that you got to look for in this move up. It's in the 1877. I thought it was 76, 75. Let me expand this out a little bit more. It's 1876.75. You can see that that was the range high on the 21st of March, and basically, a key CLVN. Above that, you've got this 81.50 that looms above, and then above the 81.50, we've got that 92.25, which is our all-time high. But currently, we're trading in around this balance. We're likely to probably come back and test this area and test the lower side of this. I took the CHVNs and CLVNs off here. I'm going to add them back on so that they're here. You can see that the key balance below the other side of balance is 55.25. That takes us below this range low from this balance area that we're talking about, where they tried to hold balance, hold value around 81.50. So right now, my range that I'm looking at around this key area of long-term, mid-term, and short-term price acceptance is the 64.75 with a breakout coming above 68.50 or a breakdown coming below this 55.25. Below 55.25, we have the 3-day microcomposite VPOC, which is this 53 area. I'd expect to come down here, try to find buyers at the 53 with the 50.75 or that 50.50. We've talked about that so often in the last couple of weeks, and the 49.50, which is becoming the dominant price down here, and that will take us down to test the value area low of this 3-day microcomposite. And then, a key number that I was talking about earlier is this 45. Below 45, we got 43, 41, and then the what I would consider to be my line in the sand for a longer duration and a longer retrace is down below the CLVN at 39, because then we're getting into this triple distribution. I still anticipate coming down here. This is a very blunt area of the profile with 3 undetermined fair values down here at 35.25, 29.50, and 25.25. I've been talking about this forever. We're not done with this zone here. So right now, the key, though, is can we hold this value around 64.50 and then break out of value, break out of balance, and continue our price discovery up to test that 71, 72 area, break through the 76, and then if we come up and accept this 81.50, then we're destined to make new highs, in my opinion. So, I mean, that's the big picture. Let's take a look at what it looks like on the little picture, and just bring the composite or the Globex chart in. We still have a high overnight at 66. Let me just move this out of the way. We still have an overnight high at 66.50. This is likely to get tested. We're going to open, outside of value. If we open right here, we're going to open up outside of value. The value area high is 65 from yesterday. The range high is 65.50. So we're either going to open up outside of value and outside of range, or we're going to open up inside, just inside a range and outside of value, depending on if they can hold above this 65 and 65.50. So we got to watch this develop. We're likely got 25 minutes. We're probably going to come up and put in a new Globex high here, at, above 66.50. But currently, that's where we are. Our VPOC, no surprise, it's right there around the long-term and mid-term. So all three are aligning. Value is 64.75, and then our overnight low is 60.75. Which is just below the 61 value area low. So we can get rid of this. We're going to keep an eye on it. Just, Howard, if we do go up and make a new high while I'm talking, if you can just let me know, please. So how do we trade this? Well, right now we've got to look for the fact that overnight inventory is net long. It's above value. Current VPOC from yesterday is 63. Value is 64.75, and we're going to open up, just outside of value and probably just outside of range. So the first thing we got to look for is anytime you open up outside of value, outside of range, you want to look for initiative buyers when you're above, which is what we're going to be looking for. And if you see initiative buyers and they don't come down and test this value area, and they rip through this 66.50 overnight high, we could get an open drive. You do not want to fade that open drive. The first spot that I'll be looking for responsive sellers is obviously going to be in between the 67 value area high and the 68.50 CLVN. So I'm actually going to use 68.50 as my trade area. Above 68.50, we've broken out of value, broken out of range, and we're breaking out of the longer term balance, and we're likely to go up. And the first target above is, you've got 69.75, but it's really 71 in the other side of that balance at 70.75 that I'm watching. So I'm actually going to make 71, actually 70.75 as my target. Now, it's a target, but it's also a CLVN, but I'm not expecting a lot of resistance above 68.50 here. So I think they really push through to the 72.50 area, which is going to be my main target above. Sorry. Okay, get some new buttons done up with these new tags. And then on the other side of that is the 76.75, which I already have in there. And then above that, our extended target and our ATR target. Up there at that 81.50. And then the other side of the 81.50 is this 86.50, which is the value area high. Thank you. And then above that, the big number above is that 92 and a quarter. And of course, I think once we get up there, we're going to see the 1900s. I don't think they're going to leave it alone. Now, if we break inside a value or inside a range, you've got 65.50 and you've got 65. Now, this becomes a little bit of a difficult area because it's also your main balance area around that 64.50. So what I would do is I would take the short on 65.50, and I would short it with, it's, basically it's not a target, it's a trade area. And I want to make this perfectly clear because you should expect responsive buyers stepping in here at the 64.75, but sometimes that doesn't happen. So if we get back inside a range, I want to get short into it, okay, but I want to make sure that I get funded before I get down to that 64.75, which is going to be the main balance area and the magnet for today, which is that 64.75 overnight VPOC and the composite VPOC and the microcomposite VPOC. I'm just going to label this, and it's going to get really convoluted here. Let me see if I can even get that one to the front. I got to get rid of this overnight VPOC. I'm going to leave the overnight VPOC out because I think we know where the balance is, and I'm just going to re-edit this. And, this is major magnet. Because it is going to influence our trading, and that's why we're going to get, most likely, if we get back inside a range, we're going to get stuck in this balance area around 64.75, and I'm not expecting a lot of movement, but I will trade towards that magnet with the hope that we will continue through down to my secondary target, which is 63, and come down and test that value area low at 61. That 61.50 was such a key area. It was the balance once, it was the support once we broke above it. It's our value area low. It's our overnight low. It's our LVN all right there. So to me, that's going to be a key area where you're going to see responsive sellers stepping in, anywhere between the 60.50 and the 61.50 area. So, so this whole area becomes a key, other side of balance trade through the major magnet down to test this level, and then looking for responsive buyers to step in. If they don't step in and rotate it back towards the magnet, then I think we come down and test the other side of this balance down here and the range low between 56.50 and 55.25. So this is going to be a trade area down here as well, that's going to extend down to that 55.25. So we got a little bit of these slush zones near the range high and the range low from yesterday. But just think about it in the bigger term of 55.25 and 68.50 as your two sides of balance around 64.75. But we could move through the major magnet and balance and test the value area low. It would be nothing for us to come down and test this this LVN and this key level. And then below that, the bears are going to try to pour it on, and they're going to try to push through down towards this other side of balance. And then below that, we've got the 53, which is the value they just accepted before they move back up into balance. So 53 is going to be my extended target to the downside. Well, not extended target, target to the downside, with the 50-50 area again becoming another area of possible responsive buyers. Also near the range low the other day. And then below that, you've got this 46.25 naked VPOC and the ATR target to the downside, which is 45.50, 45.75. So this will be, I'm going to just put my extended target right below that 46.25 and above the 45.75 is my extended target, or my main ATR target, below balance or below value. And then, of course, if we do see some weakness, the big number and a key area to watch is going to be this 39, between 39 and the year open at 37.75. But I would trade the 39 area as a possible area to add on, because if we break below 39, you want to be short into this 37.75. And then 37.75, below that, you've got the 35.25, 29.50, and the 25 is that triple distribution, and a major support line that has to hold for continuation up. Again, nothing to come down and test these areas, but if we break this 21.25, which I've talked about, then I think we're going to get a bigger retrace and see the 1700s again, at least the low 1800s. So that's what I'm looking at in the ES. I'm going to do a quick run through on the TF. I already got my lines in place for the TF. Just want to make sure that we haven't gone up and made a new high there. All right, we have made a new high at 40.50. All right, so we're going to get the same type of scenario that we have with the ES as we do with the Russell. So I'm going to use this 3970, and it's the same scenario. If we hold 3970, I'm going to be looking to get long into the overnight high, which is probably going to get taken out anyway, but a breakthrough to test this 41 and a quarter, and above 41 and a quarter I have a target of 42.50 with the other side of balance being 44. But if we get below this 39.70, I want to be short into testing and taking out the naked close, which will be 1138.10, and test this value area high and LVN at 37.75, and with a breakthrough of that to come down, take out the overnight low and the naked Deepak in this major distribution zone from yesterday with a move down. Now you've got the value area low at 33, but the big number is going to be this 31.90, 32 area, and so you can use this value area if you want to get short into this 32, because if we break 32, the main target below is 29 and the range low at 27, but it's the composite Deepak that shifted up to 21, and again, because of my tick data, it's still showing 1096.10 as the composite Deepak, but the micro composite Deepak, and what I think has shifted the composite Deepak, is up here at 21, and 21 is going to act as a magnet right now if we get outside and below the range from yesterday. I think we're going to see it if we get below this this 31.90 again. Then we're going to get a push through down to the 17. So this 17 and this distribution around 21, I think, gets tested with a break back below the 31.90 area. I got 10 minutes to go before the open, so let me just see where we are in gold. So value hasn't changed. It's still above us right now at 1301.50. We're back into this distribution zone between the 1298. This 1298 and 1298.20 and this 1276.40, and we're testing this this 1288. So we're testing the lower side and breaking out of the microcomposite value, and if we break below this 1288 area, we're likely to come down and test this 1285, 1284 with the other side of balance down here at the 1296. This 1281 can go now. So I'm looking at really this 1288 area as a dividing line between long and short. Below this, you want to be short into 85, 84 area with a push through to the 81, 82 area, which will be the range low from the microcomposite, and possibly push through down to the key number below, which is this 1276.40. Below 1276.40, you've got 1274, 1265, and remember this 1258 is the key number. And between 1258 and the 1265 area is the maximum I want to see on this pullback for the major cup and handle formation that we've been watching to stay valid. Below that, then I think we get a bigger trace, and we're probably likely going to come down all the way down to this 1241 area down here. So that's what I'm looking at. Gold, and one last thing, let's just take a look at where we are in the Renko. See how that matches up. So basically going sideways, but we're above the Keltner center line. A center line test will take us down to that 1263 area and take out the naked VPOC down here and put us back into value. A break below the 63.75 Keltner center line, the lower test of the lower line takes us down to the 57 area, and that will take us down likely by the time we get there to test the range low at this 56.50, and then that 55.75 as a key area of support. If we get below that, we could see a Keltner line walk down to the 50.50. Well, 53 would be the line walk target initially. If we stay above a test of the upper Keltner line, takes us up into that 69.75, or a test of that other side of balance, 68.50, and above that towards our, that first target at 69, but it's really the 70.75 that I'm watching. So that's what I'm looking at. Howard, I don't know what we're going to have to do. We're going to have to start earlier these days, because now that I'm covering the TF, I'm running out of time. But we want to keep these short, but we want to keep it comprehensive as well, so that people can learn. So this is going to conclude our morning homework session for Tuesday, April the 22nd, 2014. As always, trade well, trade safe, and we'll catch you on the flip side. And if you like what you see on YouTube, please feel free to hit like. Have a great day.